Well, the October volume was down by about 8%, but of course October has a few more days than the other months. So if we have a look at the daily traded volumes, the average daily traded volumes, and unfortunately we've seen some pretty sharp falls. In fact, compared to October last year in 2011, we've actually seen a fall off of 25%. Back last year we saw the average daily traded volume being $4.7 billion. This year it's fallen down to just $3.5 billion. In fact, even compared to September, we saw quite a sharp drop-off, down 17%. The September average volume on a daily basis was $4.2 billion. Now, part of that was the US stock market, where we did see Hurricane Sandy impacting, with the US stock market closed for 2 sessions. But even excluding that, it does look like October was a bit of a shaky month. So investors still a little bit nervous about investing in the market, but it looks like when they are investing in the market, they are looking at those high yielding areas.
Okay, what about fund managers? They've been in focus this week. We've received a couple of updates, including BT and Perpetual. What did they show?
It's been another difficult year for fund managers, and that's not surprising given the volumes that we have seen going through the markets and the reduction in volume. So it has been a tough market. In fact, we heard from BT Investments yesterday, and they came out with a cash profit of $41.5 million. That was quite disappointing, and it was even more disappointing when we break down the numbers, especially from its Australian business. We saw cash earnings actually decreasing by 25.6%, highlighting how difficult it is in Australia at the moment. Now, the acquisition of Joe Hambro was a big one for BT, which saw the company about doubling in size. But of course, after that acquisition, we've seen the inflows slowing down for their Joe Hambro or their UK investment business. We also saw an update from Perpetual yesterday at its annual general meeting. Now, Perpetual did say that for the first half, they are expecting to see a flat result. And we saw Perpetual shares down by about 4.3%. But that really implies an underlying profit result of between $30 to $35 million. And that's actually above our estimates. So we've seen a bit of an upgrade of our targets for FY13 and FY14 on the back of that update, but unfortunately the shares performing negatively yesterday. And the other stock to mention is Magellan Financial Group. Yesterday the stock just rocketed up by a massive 13.5%. Now, this is one company that's really been bucking the trend of investment managers. And if we have a look at that investment management environment, it's been a very difficult one, but not for the Magellan Financial Group. This is a stock that's up 200% in the last 52 weeks. It's really been bucking the trend strongly. Yesterday up by 13.5%. It does look like it's going to win another mandate with St. James Investments over in the UK. And that means it will probably see another $1.5 billion worth of inflows in the first quarter of next year. So this is a stock that's really been bucking the trend, growing its business and winning mandates, and the share price certainly reflecting that.
Yeah, and Julia, we've got the Qantas AGM ahead of us today. That'll be a big one for the market. It should be particularly interesting following those Virgin transactions earlier in the week. What are investors hoping to hear from CEO Alan Joyce?
Kate, it's going to be a pretty quiet day on the corporate news front, so no doubt there'll be a lot of focus on Qantas, which is the only major stock to have its annual general meeting today. There's going to be a lot of focus in terms of Virgin's announcement this week, and that's because Qantas's mild competitive advantage comes from both its brand and reputation, as well as its two-brand strategy. And of course, that two-brand strategy here domestically is under attack. Virgin now looking at Virgin, the premium brand, and looking at using Tiger for its discount brand. So there'll be a lot of questions on how Qantas is going to deal with this threat from Virgin. Of course, we have seen a massive reduction in costs for Qantas over the last year, and its alliance with Emirates will also be under the spotlight. Virgin is a company that's done very well in terms of its alliances, and I guess Qantas is copying that strategy with its Emirates tie-up. But also capital expenditure is going to be under the spotlight. We've heard a little bit from Qantas this morning on upgrading their fleets, and really they do need to upgrade the fleets. But I think what the market's going to be focused on is, are we going to see Qantas's gearing levels rising with that upgrade? Are we going to see excessive gearing levels? So a lot to watch out from in terms of Qantas. It's been a very exciting week in terms of aviation because of Virgin's announcement, and no doubt there'll be a lot of questions from shareholders today.